Good morning, ARMR insiders. Welcome to the morning meeting of the ARMR Investing Virtual Hedge Fund. Thanks for joining. You're looking at 4 charts right there of gold and silver and the mining stocks. We're going to get to that in a minute. We're going to talk real quick about big picture and how we're shifting the portfolio a bit. We're going to highlight the precious metals group again today. We've been on that for a while now. We're just going to update that a bit. And then, of course, our dividend portfolio is completely maxed out now. I've got no more cash to put to work, and I'll go over 2 positions that we added there that I think will be major beneficiaries of an important announcement last week out of China. So we'll go over all that. Don't forget, you guys have to be the smart money. So take all these conversations you hear, figure out your strategy, execute it, figure out your risk tolerance and your goals, and decide how you want to capture upside and at the same time protect capital. That's going to be up to you. Last week, we highlighted this. The PBOC, and really it was Chairman Xi, kind of handed down the decree that it was time to start buying U.S. Treasury bonds, something that China hasn't done in 2 decades. Add liquidity to the system. So let's highlight 2 stocks we added to the dividend portfolio right now for you. And now we're just maxed out in the dividend portfolio. Why don't we go over the dividend portfolio real quick? Because it's actually one of the strongest portfolios we're running this year. Okay. And so every time I see Rio Tinto and BHP trading down off of their highs, right on top of support, below all the moving averages, and I sit and I stare at it and I say, wow, and I come up with all these reasons why I don't want to buy it. The fact of the matter is these things are paying 5.5 to 6.5% yield, and they benefit directly from a acceleration of China's economy, which hasn't happened in a while, right? We're going through deflation, they're having trouble, whatever. We already know all that. We know all the bad news. We know the real estate crisis and all those things. So if what Chairman Xi said last week actually gets executed, and they're serious about flooding the system with capital and liquidity to stoke their economy, then 2 of the easiest beneficiaries of that are the basic material and precious metals companies, quite frankly, and energy companies. I mean, they're all a little bit of everything. BHP, I think, is even a little bit of uranium. I mean, it's a little bit of everything. It's the commodity play in the Far East. That's what those 2 stocks are to me. And you can't buy them when they're up big. They're gone already. You've got to buy them when they're weak. And this is what we do in our dividend portfolio. I'll give you an example. What's in the dividend portfolio? We bought Agnico Eagle down in the green box, picking up a 3.5% yield, and the principal's gone through the roof. We bought Newmont down here in the green box. I'll give you a green box right now. We bought Newmont right in here. Think about that. I mean, we're buying Newmont right off the bottom. We can get rid of these confusing. Let's just show you most recent additions, right? We got Newmont right in here, okay? 3.5% yield, and the yield will go up with the price of gold, okay? Right off the bottom. What we try to do is we buy things like Altria right off the bottom as it makes a bottoming wedge. Right in here, we're buying Altria at a 9.5% yield, okay? Then it explodes higher. We're buying Bristol Myers. Right, Bristol Myers right down here. These are all stocks that are in and we were buying that right in that area right here. All stocks that are in our dividend portfolio, right? Not to mention, hey, let's just look over it. How about cannabis? The cannabis REIT right in here. How about LNC, a financial company right off the bottom? Look at LNC, 6.5% yield. What do all these charts tell you? Hey, take a look at Pfizer. It hasn't taken off yet. It's in a bottoming wedge. If it could break out, we'll have a full position on there. I'll find room for it. Verizon down here, and then again right here if you wanted to, but we own it down in here. AT&T, we own AT&T down in here. Stock's down a couple percent today, data breach and all that kind of stuff, but that won't change the investment here. That's a short-term issue for them, okay? So that's how we try to put positions on. And so today, or last week, we added BHP down there and Rio. And of course, the granddaddy of them all, we own the pipelines real cheap, right? We were buying the pipelines all in here. We're long-term on this investment already now. We own pipelines down in here, and I think we added to them right here as they broke the downtrend. So we have a maxed out position there, okay? So that's the dividend portfolio. We follow a bit of a different strategy there. We buy things that are down big where the yields are their highest. We grab them. When they start to run, we try to hold them as long as possible with a wide stop and a weekly stop. So you won't see us trading that portfolio very much. And so what that means is in a bull market, that portfolio will do real well because we don't trade it. We sit on it. We collect yield. We're buying things cheap. They take off and we ride them for as long as possible. This is the chart of precious metals. So this is the highlighted group of the day, and that's going to be gold and silver stocks. The green boxes are where we own the metal. So let me be very clear this morning. We aren't buying any gold. We're going to let everybody else mark up our portfolio. And I highlight this to begin the discussion because I think it's imperative, particularly at this stage in a bull market, that we focus on buying right. You do not want to be the bag holder. You do not want to be buying the top right-hand quadrant of a chart pattern of a stock that's already been skyrocketing and you're trying to hop on momentum. That is not how you want to run money at this stage in a bull market. It won't end well. Ask me how I know that. Been doing it a long time and I've been that person. I'm not that person anymore. So what we're doing now, and I guess the major theme of this morning meeting is that we're shifting capital out of big cap tech, out of some of the tech names that are up big, and we're shifting it into assets that are just now breaking out of bottoming patterns, or we're shifting it into assets that have gone through maybe a 3-month consolidation or pullback to an uptrend. And that's where we're putting capital to capture the next surge higher. So we're buying weakness in the midst of strength. Okay. So we own precious metals down here. We're trading it. We might trade it in some portfolios. Other portfolios, we bought Sprott physical gold and silver down here. We're not trading it. All right. Nugget. We might be trading Nugget, but we have some portfolios. We bought it down here and we're just riding it. We just added last week the small cap silver stock. Now that's where they should have been added. And I know some ARMR insiders were buying the silver names down there. I was willing to put it on up here. That's the last piece last week. Okay. That's the last piece for me. Bought it last week, gapping up 2% this morning. Now, here's something I wanted to share with you I thought was interesting about the behavior of gold and silver. We look for changes in behavior to tell us how big is the fish that we've got on the line. So what I'm sharing with you is not designed to make you feel desperate to put 50% of your portfolio in the metal. I'm not saying that, okay? But I am going to share with you some changes in behavior that make us very confident in the positions we already have. So I preached to you guys November 2nd, November 6th last year. This is the risk on entry point. Risk monitor goes green. Put your max exposure on now closest to the stop. When it starts to run and it's further away from the stop, risks are higher, right? So over the last couple of weeks and going back into beginning of March, we loaded up on precious metals. I'm not chasing them here. I'm just enjoying the ride. Whatever I was willing to put on max at the beginning of March, why would I be willing to put on a lot more now when I'm further and further away from the stop? So my risk is a lot bigger. I'm not. So that's the cautionary part of this conversation. Now let's have the fun part of the conversation. Behavior is changing in the metals space, which could lead to, an exponential move in price. Things like quarter end, month end, which happened last week, they usually knock the metals down. It's like this rinse and repeat thing. I've been trading metal stocks since 2005, and it happens almost constantly. Things like London markets closed. When London markets closed, cat's away, the mice play, and they come out, central banks, bullion banks, and they beat up gold and silver at 3 a.m. this morning. And they didn't. They couldn't. Precious metals powered right through the futures roll last week. Almost never happens. I'll tell you when it happens. I've seen it happen since I've been trading metals since 2005. It happens when you're at the cusp of a big run in the metal. That's when this type of behavior happens. And so it's starting to happen. So we've got our positions on. I know some of you are out there buying individual gold and silver stocks, and I applaud you for that. If that's how you want to run your portfolio, I love it. Go get it. What I like to do is double the big cap mining stocks with Nugget. Twice the performance is enough for me. And I'm going to buy silver small cap stock. And I do it through the ETF. I don't want to try to guess which ones. I don't want a bad announcement here. So I just buy the group and I'm happy with those returns. That's a risk reward adjusted return that I'm comfortable with. You do whatever makes you comfortable. So if you see me loading up on those ETFs, the answer to your question, I get direct messages. What about this stock? What about that stock? Yes to all of them. You see what I'm saying? Like, we're buying the group. Do it however makes you feel comfortable that fits your risk tolerance. That's the key so that you can stay on the horse. It's not going to be easy. It's going to be a wild ride. So you got to figure out, what can I take, deal with the volatility, get to the end goal of making a lot of money. Okay. So let's talk about silver for a second, silver, small cap silver stocks, because that's going to dovetail into what would be maybe the 3 highlighted groups that will benefit from a move higher in the small cap index. Uranium small cap stocks. Now, this group is really compelling to me. And so this will be another highlighted group. And it looks like CCJ, which is the leader, and that's not small cap, of course. But we have this on our list. If you look at the ARMR website, you go to the portfolio page and you see what we posted on Thursday at the close of what was the top shelf ideas to consider for next week, which is today. There were only 2, CCJ and any uranium ETF you're happy with. I like URNM. All right, listen, I can't wait to work with you guys on the live trading desk. ARMR Insiders, I'll see you at 9:30. We'll get the live stream going. ARMR Report subscribers, thanks for joining us this morning. Don't forget, if you have questions, throw it into the comment section of the YouTube video. I'm happy to answer that for you. You're going to be on your own the rest of the day, so don't forget, you've got to be the smart money, execute your strategy. And of course, if you guys need me to, I can run capital for you. It depends if that makes sense, if our relationship together makes sense. So give me a call if you want. We can discuss that. I look forward to working with all of you in any manner that suits. And at the end of the day, guys, remember, be the smart. Have a great day trading.